Good afternoon, everybody. Greetings from Geneva. Thank you for joining us on this latest press briefing on the COVID-19 crisis in aviation. Today we have our Director General, Alexandre Juniac, as well as Brian Pearce, our Chief Economist. Brian will make a short presentation, and then we will throw it open to questions and answers. Brian, can I ask you to take the floor, please?
Yes, thank you, Tony, and good day, everybody. So the topic of this short presentation will be what we've seen happening in June in the data that we have for air travel markets, and also a revised outlook for the next 5 years. So let me start with the good news, and that is that we saw a further rise in air travel globally in June, the second consecutive month from the April low point. The bad news, though, as you can see from this chart, is that rise is barely visible. It was disappointingly and unexpectedly weak. What we saw in June, the level of RPKs globally that you can see there is actually 86.5% lower than it was this time last year. At the low point in April, it was just over 94% down. So it's moving in the right direction. But as you can see, we've seen nowhere near the improvement in air travel that we've seen in global business confidence. Businesses in the manufacturing and services sector worldwide have become more confident as economies have unlocked, but that hasn't translated into a significant increase in air travel. The rise that we did see in both May and June have been very narrowly based really around domestic air travel. We have seen some encouraging return to travel in a number of domestic markets, particularly in Asia, and you can see here that the Chinese domestic market is back in June to a point just over 35% below where it was last year. So a very marked improvement there. And some Asian markets like Vietnam are actually back to where they were before the crisis. US has picked up, as you can see, in June. Unfortunately, the renewed surge of COVID cases has rather knocked that back. And at the bottom of the chart, you can see that internationally, there's almost no improvement at all in air travel so far. Of course, the reason for the lack of improvement internationally is that, as you can see here, we still have very restrictive border and air travel controls, apart from a few air travel corridors or travel bubbles, for example, within the European Union. And as we heard in the last couple of days, even there, we're seeing some resurgence of COVID-19 cases in a number of countries, which has resulted in the UK closing its borders to travel to Spain, which is clearly creating not just closed borders, but uncertainty in the minds of the travelling public, which is certainly, I think, damaging for the confidence that's needed to get travel back. Aside from the increase in flights that we're starting to see, the problem for airlines is that load factors in most cases are still at all-time lows for the month. As you can see, the blue dots there are right at the bottom or the left-hand side of the range over history. International load factors averaged less than 40% in June. It's a rather better situation on domestic markets. On average, across all domestic markets, load factors are now just below 63%. And in domestic China, as you can see at the bottom of that chart, they're almost at 70%. I think the challenge for airlines is that break-even load factors have risen because of the costs resulting from the impact of the health controls, with slower turnaround times and less utilization of aircraft and, in some cases, of seats. And I think more generally we're seeing some difficulties as we move into the restart period, and the difficulties being that airlines are finding themselves in a situation where they're actually still burning a lot of cash. They're seeing their cash balances fall, essentially because the rise in traffic has been less than expected. And so, as you can see, capacity growth, and this shows domestic markets, has been put back on the markets at a faster pace than we're seeing the growth in traffic or demand. And that's leading to some certainly stopping any improvement in cash burn. And that problem that demand is disappointingly low relative to the capacity and flights that airlines are putting back on markets, as you can see, seems to be a growing problem. It certainly was in July, and this shows the global picture. So the dotted blue line shows what we would expect to see July traffic based on the bookings data that we have. And there's a further improvement which looks to be in the pipeline for July. But as you can see, we know the flights that have been taking place this month, and they've certainly increased at a faster pace. And if we look at the schedules data, airlines were certainly hoping to increase services significantly more than we're seeing the rise in demand. So unless we see a pickup in the pace of demand, I think we're necessarily going to see some of those schedules cancelled. I think perhaps one of the reasons that airlines had expected to see stronger demand was this rise that we've seen in business confidence in a number of major economies after economies were unlocked and there was a return to work. And this shows the confidence of businesses across the economies in the manufacturing and the services sector. And as you can see, China is back up above where it was pre-crisis, and the US and major European economies are also not quite where they were before the crisis, but confidence has picked up strongly. This is usually very correlated to GDP growth. We've seen GDP in China in the second quarter rise strongly. That's all very positive, but it has not translated into more flying. And I think what we've seen is a behavioural change, at least initially, in business travel. And certainly, we are not seeing the business travel that we would normally expect from that rise in business confidence. And indeed, perhaps the bigger problem at the moment is that while leisure travel is expected to recover earlier and perhaps more strongly than business travel, one of the critical drivers of leisure travel is the confidence of consumers. And although we can see some improvement from the April low point in this chart here, as you can see, this looks nothing like the confidence of businesses. Consumers are much less confident, and they've seen very much less recovery in their confidence. And that's perhaps not surprising given the rise and the expected rise of unemployment as firms are forced to restructure, particularly as governments start to reduce and unwind the wage subsidies that have kept many people in employment during the lockdown. So that's the current situation. I think that's one of the reasons why we've had such a weak rise in air travel in the last 2 months. We've done an exercise looking forward for the rest of this year and the next 5 years with our joint venture partner, Tourism Economics, part of the Oxford Economics group. We looked at 2 scenarios around our baseline forecast. And as you can see from the blue line here, GDP is expected to recover 2019 levels in that baseline sometime next year, 2021. There is a case where we could see faster growth if we see faster than expected progress in developing and implementing a vaccine. In our baseline, we're assuming that to take place in the second half of 2021. The faster, more optimistic case is for that to happen in the second half of this year. But as you can see, the downside risk is probably greater. And this scenario looks at the case where we see a major second wave of COVID during the winter, and that having a much deeper, more severe effect on economies around the world. So given those economic scenarios, we've had another look at our view of global RPK, so the air travel market, and you can see the result here compared to what we were forecasting before the crisis at the end of last year. I guess the first point to make is that we think that the second half of this year will be a slower recovery than we had hoped, and we've already seen that in May and June, and we think there'll be a continuation of that. And because of the rise of COVID in a number of countries, we think that the opening of international borders will take longer than we had hoped. So we think that we're probably going to see RPKs on average down 63% in 2020. We've previously been expecting 55% fall. As you can see, we are expecting next year to be better. In fact, a 75% increase from those very depressed 2020 levels. But the level in 2021 will probably still be something like 36% lower than 2019 levels. And we're now not expecting 2019 levels to be reached until 2024, which is a year later than we had previously expected. By 2025, so 5 years out, the baseline forecast is about perhaps 15% below what we had been expecting pre-COVID, the dotted line. So quite a gap, quite a loss there. And indeed, you can see from the range of uncertainty, which is based on those scenarios, that there is some upside, but we do think that the bulk of the uncertainty is probably, the risks are probably more on the downside over the next few years. And I will stop there and hand back to Tony. Thank you very much.
Great, thank you, Brian. We'll now move to questions. We have one question in the queue, so if you have questions, please do submit them. The first question asks if the recent losses posted by U.S. airlines are in the second quarter are in line or worse than IATA's previous expectations for the region in our 2020 forecast.
Let me take that first, Alexandre. Yes, slightly worse. And I think it's true to say that those second quarter results were slightly worse than the numbers that the market was expecting. And I think we're the key second quarter numbers are clearly going to be pretty bad. Because that is the low point. We saw the low point in traffic being hit in April. The second quarter is the worst point. I think the key will be what we see happening to results as we come into the restart period. And perhaps we'll see that first in the third quarter. But what I would say is, it's not all bad news. And in fact, we've seen in Asia, some of the Asian airlines have been reporting surprisingly good results because the cargo market has actually been rather strong. It's really the passenger market that has suffered dramatically because of COVID.
Okay, thanks, Brian. We have another question for you, which would be, how do the high-level information that we presented today, how does that play out for Europe and Germany in particular?
Europe has opened its borders already for international travel. I think the prospects still do very much depend on how we will see the virus develop. Ahead of any vaccine, it really depends on how well countries manage to control the virus. And we've seen some issues arising. As I mentioned, the UK have stopped travel with Spain. It's created a lot of uncertainty, and I think that that is clearly going to be an issue with the recovery. And I think what we haven't seen is the sort of progress that we need for more widespread border openings, particularly for longer haul, particularly for intercontinental travel. The Atlantic market, the North Atlantic market, is really important for both US and European airlines, and we certainly haven't seen progress in opening that market for the moment.
Okay, thank you, Brian. We have another question on the detail. You mentioned that break-even load factors are higher because of increased costs. How much higher are costs, and what costs in particular are rising?
Right. We're in a reasonably good situation in respect to fuel costs, which obviously have been the industry's major cost. However, the problem is with the fact that the industry is very capital intensive. So there are large fixed costs associated with the aircraft. You need to have that aircraft flying in as many hours as possible, and you need to have seats as full as possible. Otherwise, low utilization of aircraft and seats will mean that unit costs will rise. And so it's those costs associated with slower turnaround times, low load factors. It's those costs which are associated, of course, with the controls that have been put in place that are causing the problems for airlines. It is making air travel more expensive. The financial challenge is that airlines aren't able to get yields that anywhere near reflect those increased costs.
Okay, thank you, Brian. We have a question for Alexandre on IATA's position with respect to testing. Recently, several airline CEOs wrote to the White House and the European Commission asking for progress on testing. The question is there any movement on that proposal to use testing to reopen the transatlantic air travel market? Is work proceeding on testing, or does this just remain a proposal?
Our position on testing is that we are in favor of introducing testing, especially between countries that have a different level of infection. But we do not see for the moment the testing system ready to accommodate with the constraints of air travel, especially because we need for that system testing that is reliable, scalable, pretty comfortable, and fast to give results within a reasonable timing. So in that case, we are in favor of testing passengers, particularly between countries which have a different rate of infection. We are in a very close contact with the pharmaceutical industry and the laboratories who are manufacturing tests. We see that we understand that the testing system would meet the characteristics I mentioned, perhaps in the coming weeks or a few months, and then we could be ready to have these testing processes implemented. So that's what we how we see the testing for passengers.
Okay, thank you, Alexandre. We have a question about Chinese airlines. How do we assess their profitability now compared to countries and carriers in other parts of the world? Are they doing better off in this pandemic, or equal, or worse off? Maybe Brian, you want to take that to start with?
Yeah, let me take that one first. And as with the US, the important market for Chinese airlines is their home market, is their domestic market. It's a very big market, and we've seen that recovering earlier. China had its low point in February, so that's several months more. We're seeing load factors near 70% in China. Traffic is 35% lower than it was a year ago. So the Chinese airlines are much further down the curve. What we haven't seen though is actually the results that they're able to have come out with, because what we do know is that despite the fact that a number of costs around flying are much higher in this environment, they had to cut fares domestically by about 40% to stimulate the demand that we're seeing. So I think it's although we haven't got visibility of their quarterly results in China, I think they will still be having quite a difficult time. And for most airlines around the world, we would expect them to continue to burn cash probably for the rest of this year. Not until 2021 will we think that sort of break even and positive cash flow will be generated.
Okay, thank you, Brian. We have a question specifically looking at Europe and asking, what is the break-even load factor for carriers in Europe?
Oh, that's very hard to say just at the moment, because it's the ratio of unit costs to yields. We've done some work looking at what would happen to unit costs given the additional, the low utilization of assets, and they're up very significantly. But because we really don't know what a representative yield or fare is at the moment, because there's so little flying taking place. So I'm afraid that's very hard to say. It was in the mid-70s in 2019. Now, obviously, fuel prices have fallen since then, which will be some offsetting factor to the higher unit costs from lower utilization. But we would imagine that it would be at or above those levels. But it's very hard to put a precise number on it, I'm afraid.
Okay, thank you, Brian. We have a question from India. The questioner says that the Indian government has decided to extend a fare cap on domestic flights and also to cap domestic flying at 45% until November 24th. What impact will that have on the recovery in India, and will that have a knock-on effect across Asia Pacific or in the region? Brian, did you want to take a first stab at that?
Sure. Okay. I think we think that capping prices or putting floors on prices are very much a last resort action. I think all the experience of recent decades has shown that private companies, the market is a much better way of assessing what consumers are willing to pay or not. And I think the trouble with a price cap and a limit on flying is that India is going to lose the wider benefits of air travel, the connections between cities that allow not just travellers who will spend money in the cities, but also the trade that's carried by those aircraft as well. So I think there are wider economic consequences that would have thought it would delay the recovery.
Yeah. Indeed, the focus should be on measures to control the virus through biosafety measures rather than these economic measures. Would you agree, Alexandre? Okay. Perhaps we've lost him. Let's move on to the next question. What is IATA's view of COVID testing on passengers as a way out of the stalemate for airlines? So this is going back to an earlier question that we had. And will there need to be, I suppose, some sort of agreement or standard across countries, or should they operate their own individual testing programs? And who should manage and fund these programs, and should airlines be contributing to them? So that's quite a broad question on testing. Alexandre, are you able to take that one?
Yeah, I didn't understand the first part of the question. The connection was not good.
Sure. So the first part of the question was, do we see testing as a way out of the current stalemate of closed borders? And then secondly, if we do believe that it has a role, how should that system be managed in terms of standards, in terms of funding, and what should the airlines be contributing to that?
We see the testing system as one solution that is very helpful to guarantee that the risk of transmission of the virus between two countries is limited or minimized. Secondly, the cost of testing is an issue that could be a barrier to air travel if it was to be paid by the passengers. And so what we say is that if governments rely on testing, and if they impose testing, it should be funded and financed by government according to the international health regulation that has been issued by the WHO. The contribution of the airline could be, to help to organize the testing, probably with the airport and within the airport area, to ensure that when the passenger comes to an airplane, he enters into a kind of a safe bubble in which everybody will have been tested and tested negatively. So that would be the kind of insurance that passengers that are flying are not infected, and so it would minimize significantly the risk of virus transmission.
Okay, thank you, Alexandre. We have a question about this past weekend's reintroduction of quarantine by the UK on travellers returning from Spain. And the question is, what impact do we think that will have on the industry's recovery? And could it possibly be significant enough that we'd have to revise our outlook for the development of European traffic?
It is very significant. I mean, it's a really big market. 43 million passengers, at least in 2019. It was 43 million passengers. It's almost $5 billion worth of passenger revenues. And actually, it's more important for Spain than for the UK. It represents something like 21% of the Spanish market. For the UK, it represents about 17%. I mean, actually, both of those are big figures. This is quite an important European air travel market. So it is important, and it's certainly this has been one of the factors. We didn't explicitly incorporate this into the forecast, but we took a much more cautious view in our current just released forecast of developments in Europe and elsewhere, because we saw the COVID virus resurging and second waves in a more severe way than we had been expecting. Thank you.
Okay, thank you, Brian. We have a question about business travel. And the questioner asks, what does the lack of business travel suggest for the prospects of the market going forward? And would you expect business travel to recover in line with your broader 2024 forecast, or have behaviors or travel patterns changed significantly?
Well, I think they've certainly changed short term. Maybe it obviously will remain to be seen whether we see a recovery to pre-crisis business travel patterns. I mean, our concern is that we won't. We know corporate buyers are imposing, some very severe travel policies at the moment. For those that haven't, for those that have lifted those policies, I think we see much less business travel to company offices, and this has some pretty big consequences for the industry, as I say, at least in the short term, in that for many network airlines, the premium paying passenger, essentially the one that drove the profitability of the business, and secondly, a lot of the long haul markets also depend on premium paying business travellers for their viability. So it either means that those markets will become much more expensive, or airlines are going to have to be more creative. And I guess one of the other bits of news we're releasing today is on cargo, which is actually recovering a little faster than the passenger market. And the cargo business has certainly seen much stronger revenues because there has been a capacity shortage with the grounding of the passenger fleet. And I think what we'll see is cargo becoming a much more important factor in the economic viability of flights, particularly long haul, and it might sort of take the place of business travel as a key source of revenue, at least for the next couple of years.
Okay, thanks, Brian. We have a question about what's perceived to be a different pace of capacity reintroduction between Asia and Europe. The questioner suggests that Asian airlines are talking about perhaps low double-digit capacity compared to 2019 levels by the end of this year. And at the same time, we're seeing European carriers talking more in the range of 50 to 75%. How do we see that sort of gap playing out in industry developments going forward?
I think that reflects the markets, doesn't it? You've got markets like Vietnam that the domestic market has recovered. Obviously, we have to see. There's obviously a renewed resurgence of COVID in Vietnam, so we'll have to see what happens. But I think that airlines are having to play it very carefully, and because we're not faced with a generalized rise in air travel. It's just in certain pockets. I think the difference in the capacity growth between Asia and Europe is largely reflecting that we've seen a better recovery in domestic markets in Asia than we have here in Europe.
Okay, we have a couple of questions on business travel. So the first question refers to the potential hassle of measures that are being put in place, so testing, masks, quarantine, etc. Do you think that's going to be a barrier for business travelers, perhaps more so than it would be for leisure travelers, sort of the hassle factor? And then a second question, similarly on business travel, is asking about the impact of meetings being conducted via Zoom or other types of electronic means virtually. And the question is, what can airlines do to react to that? So maybe, Alexandre, did you want to take that question?
I'm not sure because I don't understand the question, so to start with.
So the question is, are we seeing, first off, the hassle factor potentially putting off business travel? And second part of the question...
I don't understand what is the hassle factor. So,
masks, potential testing, potential quarantine. So as travel resumes, there will be new elements to that, like testing, masks, potentially quarantine in some cases.
Perhaps if I could just very quickly make a couple of comments. I mean, certainly our work looking at what drives passenger behaviour, shows, and as we know, that convenience is much more important for the business travel than it is for the leisure traveller, for whom price is the key driver. And we're seeing airlines trying to stimulate the demand of leisure travellers through low fares. So yes, I think you would expect the increased hassle. It's more, in principle, more inconvenient to fly to affect business travellers. But I think perhaps that's something that Alexandre might be able to comment on. Having experienced a few of these flights, and whether or not he thinks that the experience will actually be much more difficult.
Alexandre, you'd taken a couple trips within Europe. Have you experienced hassles during that travel?
No hassles. For the moment, the constraints are more than bearable, and everybody that I've seen, in the cabin cope with it pretty easily. So I haven't seen problems at this stage.
Okay. So then the second element of the question is, have technologies like Zoom or Teams or House Party permanently changed the way that people are going to do business in the future with more virtual meetings and less air travel?
Yeah, I mean, that's an interesting question. But I'd remind everybody that we've had this question before, haven't we? For decades. I think people have been predicting the end of business travel because of video conferencing technologies, and it's never happened. I mean, I think clearly the experience of the last few months has shown that you can use these technologies to operate many businesses, and I think clearly that will have an effect, certainly in the short term. But I know we've been speaking to a number of the corporate travel buyers, and we've had some interesting views. One of which being that these technologies make them much more productive. They can speak to many more clients in a day, but they're still actually going to go and need to visit them to close the deal or to cement the relationship. So, yes, there will be some impact, but I don't think that they're going to mean the end to the need to have face-to-face meetings. And obviously, business travel by air is still going to be required to do that.
Okay, thank you. We have a question about jet fuel. So do we have any figures on jet fuel demand? And how soon, I suppose, in the overall outlook for traffic development, do we ever see us getting back to the old demand growth trajectory?
I mean, jet fuel demand has fallen precipitously with the fall in the number of flights, and is recovering correspondingly. I mean, it's not recovering as quickly as it fell, because many of those flights are short haul. So the longer haul fuel consuming flights just aren't taking place, except for cargo. if you recall the last chart I presented, which showed the trajectory of air travel compared to where we had previously forecast it to be before the crisis, and you can see those lines don't meet. So certainly within the next 5 years, even on the upside scenario, we're not expecting pre-crisis demand levels for fuel to be regained. Longer term, it is possible, with a vaccine, and if we see limited changes to behaviour, it might be possible. One of our scenarios is that in 10 years' time, we would get back to the baseline, but that's if everything goes right.
Okay, thank you. We have another question saying, if we're looking at RPKs being down 63%, what does that do to the forecast for overall revenues and industry losses?
Makes them worse. It's, and I think that, the overall environment has become much more challenging. I mean, we knew it was difficult in the lockdown phase, and we've seen substantial support from governments in many countries, keeping the industry alive during that period. I think it's now becoming apparent that in the restart phase, as airlines start flying again, sometimes the economics are more difficult because airlines are having to take on costs. And as we've seen with these numbers, the demand and the revenues are not rising as quickly as was expected. So airlines are still burning cash. So we've not come out with any revised forecasts for profitability, but certainly at the moment the situation is deteriorating relative to what we had expected in our mid-year forecast.
Okay. We have a question specific to the transatlantic market. How much is that down compared to 2019?
I actually don't have numbers here in front of me. We do have those numbers, but I would imagine that it's we know that, Europe is down 97%, North America is down 97%. I'd be very surprised if in June we're not seeing similarly low numbers for the transatlantic market, because obviously the US is US and Europe. There's no scheduled traffic for air travel going on. There is some cargo business going on, but not air travel. But we could certainly get back to you with some actual numbers for June for the transatlantic if you get in touch.
Okay, thank you, Brian. We have a question from Africa, and the questioner notes that several airlines have announced that they're reconnecting with the continent. And the question is, how do we see the overall picture in Africa, I suppose, compared to the rest of the world? And how does Africa factor into today's forecast announcement?
Okay, let me quickly take that. I think Africa is... Africa's having a hard time now with the behaviour of the coronavirus. It's essentially, some weeks, perhaps a month or more behind the profile of other parts of the world. So we've got, rapidly rising cases in a number of countries, which is interfering with the earlier plans to reopen some markets. So I think we're going to see Africa having quite a difficult time over the next few months, because of the COVID profile and government responses to that. In terms of how it's affecting our forecast, it's not the main driver. I mean, if you look at the scale of the African air passenger market in terms of RPKs, it represents just over 2% of global RPKs. So, there's an effect, but it's really on the margin.
Okay, thanks, Brian. We have a question about slot waivers. IATA's been asking for an extension of the slot waivers through the winter season. What's the status of that request? Maybe Alexandre, that's one for you.
Yes, it depends on the part of the world. In some countries, we have obtained that waiver already. But in Europe, we are still struggling to have a decision made at least by September for this waiver. So it's heavily dependent on the part of the world. But we are pretty optimistic to obtain these waivers almost everywhere. The point is to have it at the right time for the airline to be able to prepare the schedule properly.
Okay, thank you. We have another question on testing, and this talks about testing for aircrew on arrival or pre-flight. And particularly this is an issue in Hong Kong, but it says that, the questioner says that we seem to be moving away from the IATA position, which is testing on departure, with a few hurdles during the pandemic. So I guess the question is really, what is IATA's position on testing of aircrew?
I'm not sure that we have a position established on that. I'm not sure we have a position on that.
Yeah, I mean, in general, the crew tend to be isolated from the general population, and there have been some measures to try and ensure that the crew are contained within their hotels while on layover. So with certain measures like that, I think we're not supporting general testing of crew as a prerequisite for flight. Would that be correct? Yeah. So yes. So we'll leave it at that for that question. And move on to the next, which talks about airline bankruptcies. And the question is, we haven't seen as many bankruptcies as were earlier talked about. Now that we see costs are rising, we see demand not coming back as quickly as anticipated. Are we still anticipating more airline bankruptcies in the months ahead? Or has government aid helped to avoid that?
Well, government aid certainly has made an enormous contribution in keeping the industry alive and preventing the bankruptcies that would have been inevitable given the extent of cash burn and the limited cash resources at the start of the year. So government aid has been really important. For the larger airlines, there's an additional factor in that they've been out in the capital markets raising a lot more cash. There have been lots of equity issues recently. There have been lots of cash raised from debt against aircraft or slots. So many of the larger airlines have actually got very substantial cash reserves now, and that's going to help them through what is now looking like a very difficult business environment in the restart period. I think our worries are for the smaller, medium-sized airlines who don't have the access to the capital markets. So once governments start to unwind, particularly the wage subsidies and other support, I think we're going to see, a much more difficult environment. And I think, airline failures are unfortunately going to be inevitable unless we see demand pick up faster than we're expecting today.
Okay, thank you. We have a question for Alexandre, and the questioner asks about the prognosis for state aid for carriers in Latin America. The questioner suggests that it's a lost cause, and he asks, what are the other things that governments can do, if not provide state aid, to promote the recovery of the industry in Latin America?
If governments are not able to help their companies, they will see that company going bankrupt, which is almost the case of two of the biggest one in Latin America. So what to say? I don't see what else they can do except reducing costs or having more easing in their regulatory system. But otherwise, I do not see anything that could replace state aid in this situation.
Okay, thank you. We have a question about the outlook for low-cost carriers. Given that there's a certain amount of pessimism around business travel, do we think that low-cost models will fare better in being able to survive the next year or two? Or do you think government subsidies might maintain the status quo?
I think having costs that are suitable for this environment, i.e. as low as possible, is going to be an advantage, and I think we're seeing that already with certainly some of the low-cost carriers who are, particularly I think point-to-point operations, is the business model that are suited to current conditions. Those airlines that depend on hubs with feeder routes to consolidate passengers to sufficient loads, are really struggling because many of those feeder markets are closed. Certainly in the short term, I think those point-to-point operations, low cost, in a market where airlines are trying to stimulate demand with low fares, are going to be more successful. But I think, as markets come back, and we are expecting them to come back more significantly in 2021, then I think, and as markets open up, particularly once a vaccine, when hopefully a vaccine is introduced, then I think we're going to see, the stronger network airlines, resuming their growth.
Yep. Okay, thank you. Yeah, we have time for just a couple more questions. So one questioner asks about how the 5-year passenger forecast will play out in the Middle East. Brian, do you have any outlook for that region in particular?
Sure. I think for the Gulf airlines, I think the challenge is that they have certainly been very successful in the past in serving long haul markets, connecting passengers from Asia to Europe or North America via their super connector hubs in the Gulf. And unfortunately, those markets look like they're going to be the last to open. No doubt carriers in the region will adapt themselves, but we're certainly seeing travel at least in the next sort of 18 months or so, being much more shorter haul until those longer haul markets resume. I think over the 5-year period, we should be back to what we saw before, and I don't think there's any reason why those Sixth Freedom super connector business models shouldn't work in the environment that we would expect to see in sort of 4 or 5 years' time. But it might be a difficult challenge getting there.
Okay, thanks, Brian. We have, I guess, time for one last question. And the questioner asks if we see the reluctance to fly as being driven more by economics or by fear and health and quarantine issues.
I'm not sure. I'm not sure we know that. Huh?
Yeah, we've done some public opinion polling, which certainly highlights difficulties in both areas. We've seen people express high levels of concern, which we are trying to mitigate with the biosafety measures that the industry is implementing. At the same time, in response to questions about blockers for restarting travel, we do see a significant number of people indicating that economic barriers would be a part of that reluctance to travel. But as Alexandre said, there is no hard and fast answer for that just yet. That's the end of the questions that I see coming in. I believe we've answered most of them, and we're coming up to the hour. So thank you all very much for joining the briefing again.